Alright everyone, here we are with another video with Invest for Tomorrow. And to all the first time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video, and it helps out the YouTube channel, as well as stay tuned towards the end of the video because I have a ticker symbol you won't want to miss, and you definitely want to add it to your watch list if you don't have it already. So stay tuned for all the information. We're going to jump into this now, but stay tuned towards the end because it's in the EV sector. And this may just be a temporary pullback. And when temporary pullbacks happen, those are opportunities in my eyes. And I'm going to share with you guys why I believe it's an opportunity. So stay tuned. So here we are. Nndm stock Nano Dimension. Nano Dimension has been pulling downwards. We saw how other institutional ownership has been involved and it's been going up, not just ARK Invest, but new positions are being made or added to by other large institutions. Now, I also saw some of their average prices around $5 to $6. So the closer this gets to this bottom here, the better this is looking for the long term. For the long-term investor. For the short-term investor, it's not looking so good, not so exciting because the stock keeps on breaking through supports and it keeps on going downwards, right? But here in Invest for Tomorrow, my concept is always to focus on the future. Not now, not the next 5 days, not the next week, because I want investors to maximize profits and minimize losses. And how do you do that? By investing for tomorrow. No pun intended, but for tomorrow. When I mean by tomorrow, the future, the time ahead, months from now, right? Because if you think about it, every single investor that's been investing since down here and even here saw an opportunity, and it's been going up since. Now it's going downwards. The investor saw an opportunity here. Yeah, it went up. It's going back down pretty fast because that's just the way our market is right now. Very, very turbulent. Many different factors. A lot of just headwinds just coming back and forth overall for the market. And then individual stocks are getting hit. So yes, it's pulling down right now. But in the bigger picture of things, if institutional investors are buying new positions or buying into their same positions and averaging up, and they're sitting at around $5 to $6 at average cost, that lets you know that that's a nice medium for, entry for those that haven't entered or want to average down. And I'm not a financial advisor. This is not financial advice. I'm not here to tell you guys to buy, sell, or hold any positions, but I am here to enlighten you guys. And that's something that I found very interesting. So the closer it gets to these numbers, the more intriguing Nano Dimensions could be. Now, could it break through that? Possibly. But a lot of investors are forgetting that when you're investing in Nano Dimensions, you're investing in the future, investing for tomorrow. Again, no pun intended. Why? Because you're investing in a technology that's going to disrupt the way things are done, and it's just starting to become a norm, and it has a long way to go to expand and get its market share, especially if you've listened to how CATHIE Wood talks about this company. So, here we are sitting at around 844 post-market. The 50-day moving average is 941. Anything below it is bearish. Anything above it is bullish. I do want every single investor and viewer to be aware of that. Super, super important to watch for and be mindful of. Now, our support level is 836, and we are in bearish territory. If that gets broken through, we're getting deeper into bearish territory, hitting newer lows, and getting further away from the 50-day moving average. I want every single investor and viewer to be aware that 836 is a point of reference to watch carefully and see how this stock is reacting. If it breaks through that, the next point is down here at 786. But before worrying about that, right now you just want to focus on 836 and see what's going on. Now, as this pulls downwards, I'm not saying it could reach back to these numbers. Like I was stating earlier, it just makes it more intriguing and more interesting based off of the average cost basis of institutional investors. But if it does reach back to those numbers, we have some things to watch carefully, and we're going to see how ARK Invest starts to unload or load up. That's going to be some bold statements coming, towards that time, because we like to watch ARK Invest, which we're going to talk about in just a moment. Now, our resistance is truly way up here at 929, but since it's such a broad stretch, I kind of narrowed it down to this point where the bears were pulling down and the bulls try to hold it up before falling again. So this is a nice midway point. It's not an official resistance level. It's unofficial. I would use it. It's optional. Now, if you want to go all the way to the stretch, 929. But 887 is the first resistance level here in my eyes. How I would dissect the chart and use it as a support, then the bulls can pull upward. So 887, super important to be crossed. It can give us some indications of momentum. Doesn't signify that the bulls are going to break through the 50-day moving average. Doesn't signify that they're going to get back into bullish territory. It is just an indicator for us investors to know where this is heading. So 887, super, super good to look at and watch. And if the bulls break through it and use it as support and bounce off of it, they can build some momentum from there. So let's go ahead and see how ARK Invest has positioned themselves from yesterday to today. So here we are with the 23rd, which was right here yesterday. Today's the 24th. On ARKQ, they had 6,944,623 shares. Now, when we look at the 24th, let's go ahead and pull it up. Actually, the 24th, I do not have pulled up. I have the same one here for ARKW. Let me go ahead and pull that up. So here we have the 24th, and they have a total amount of 6,944,623 shares. So when we look at yesterday to today, it's the same amount. Today, the 24th, yesterday, the 23rd. So let's go ahead and look at ARKW. So the ARKW fund, right, on the 23rd, they had 5,726,918. And today, ARKW on the 24th, 5,726,918. So when you look at both ETFs, they have the same amount of shares. Okay, I do want you guys to be aware of that. Same amount of shares. Nothing has changed. They're being very neutral about this right now, which is interesting to me, but we still need to watch carefully how this is going to continue to react. They haven't sold. Seems pretty bullish to me. When you hold or buy, you're bullish. When you sell, you're getting a little bearish. But Nano Dimensions, I will only allow it to be sold from ARK Invest ETFs if they're trying to rebalance in no more than 100,000 at a time, which so far they've been doing really well at keeping it within those areas. And I said I won't allow them. No, they can do whatever they want. Those are the check marks I'm looking for. Let's put it that way. That sounded very demanding, and I have no control over them. Basically, the check marks that I'm looking for on beneath 100,000 in a day and rebalancing and adding to other positions. Okay, that's fair. But right now, they're neutral. I look forward to seeing your guys' thoughts. Let's go ahead and see how this plays out going into tomorrow, if the bleeding can stop for the overall market, or will it continue in a very slow fashion like we've been seeing in the last several days. Stay tuned till the end because I have a ticker symbol you guys don't want to miss. You definitely want to have it on your watch list. And as always, guys, if you learned something new, subscribe. Don't forget to click on the bell to not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button because it helps out the YouTube channel and it lets me know as a creator and as an investor and as I put my time into these videos that you appreciate all the hard effort and time that I put into everything that I explain here before presenting it to you guys. As always, thank you guys so much for watching and stay tuned. All right, everyone, here we are with another video with Invest for Tomorrow. To all the first-time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. Stay tuned on in because we got a lot to cover, and let's talk about how this is speculative but also an opportunity. So the first thing is I have neo.com pulled up. Definitely go check out the website so you can see more about their product and the opportunity that lies with this company. So let's go ahead and see their chart. And their highest was almost $67 at some point, and their lows recently were 31, and we're sitting at 37. So I mentioned this one over at the Patreon earlier today, and I blocked out the other two stocks because it's only fair for the Patreons. So if you're interested in knowing live updates weekly, what stocks I'm watching, and throughout the week as opportunities like this one present themselves, you join us and join me over at the Patreon to know more about it. But let's go ahead and read this. So speculative stocks, but some interesting ones to watch. The reason why I said speculative, because there's some tensions right now with Chinese and U.S. relations, which we went through that last year. I went ahead and talked about, I don't know if you remember last year's tensions, quote unquote, but you know, the delisting and the auditing and the 3 years till they're going ahead and get delisted or whatever it was the case be, you know, it was hitting these stocks. Now they are speculative because these tensions, quote unquote, could actually hurt the stocks. If these tensions get worse or more serious, it could hurt the stocks short term. When I say short term, the rest of the year, the next coming months, or the next 2 years until things kind of loosen up or get a little bit better. But if they're temporary pullbacks that last a few weeks or days, these are opportunities before us. So I went ahead and said it. NIO is called the Tesla of China, and NIO operates in China's premium electric vehicle market. Like, this is the top of the line when it comes to EVs in China. They have a following, which their business models is impressive. And what I mean by that, they have a following, they have a cult-like following, and they're doing a really good job with their business model of making people have to come back to them for a battery swap. That's like impressive, okay? They're the only ones mastering this and taking advantage of this in their sector. It is sitting close to $37 and has hit a high of $67. So let's go ahead and go over here to see the article, and I'm going to go ahead and kind of break it down. So there's like a $30 difference right now, right? And I'm going to break down those $30. Hypothetically speaking, I'm not a financial advisor, and I am not here to tell you guys to buy, sell, or hold any positions, but I am here to enlighten you guys and open your perspective to something you may have overlooked or not understood or seen before. So this article talks about every reason why NIO is volatile and it's stumbling again today. So let's look at the three main reasons. The first one, treasury yields. That's temporary. That's happening to the whole market. This is not just NIO. China-US relations. This could be temporary. This is what's making it very speculative right now. And the third thing is chip shortages. Okay? Chip shortages are not that big of a deal. This is temporary. This is going to get passed over. It's hurt the entire auto sector. So out of these three situations, two of them is happening universally in the market, and this one's universally in the entire auto sector. So chip shortages, we can get past. Treasury yields, we can get past. Now, for Chinese EV maker NIO, that's certainly not bullish for the company's American expansion plans. Add in broad delisting concerns and things are tense. This is all fear, right? Based off of this right here. So what is being said here? China and U.S. relations have taken a beating in recent days. U.S. and Chinese senior officials met for the first time last week under President Joe Biden, and conversations were less than friendly. Indeed, there's a lot of baggage here between the two countries. President Donald Trump's trade war and Biden's Buy America stance have made Chinese and U.S. trade headwinds. Once again, the talk of the town among EV investors. Okay, so when this is going on, this lets you know that you want to focus on U.S. EV, right? And something that a lot of investors didn't have was like a Tesla competitor within the U.S. market. Now, CCIV has came into the picture. Whether CCIV is good enough or not good enough, I think a lot of investors are going to feel more comfortable with the Buy America stance, right, than focusing on Chinese. That's why Chinese is speculative right now. But if I was to break down the $30 that we're losing here, and all of this was to hopefully recover and one or the other would damage it, this is temporary for sure. This is temporary for sure. And these two right here account for $20 that we've probably lost here. So this can jump back up to 57. Okay. Now what's going to hurt it the most to get back up to those highs, and this is hypothetically speaking, I just want you guys to open your perspective on how much this has been pulled down by a temporary setback. So there's about $20 right now that are missing by a temporary setback. Now this is the most important $10, and these $10 could actually cost the stock the whole entire $30 or even more, or worst case scenario, delisting concerns. And this is where the fear comes in, and you need to rationalize as an investor what's really going on. So this had the issue with the delisting, and they talked about it last year. It's going to take 3 years before they're audited or they have to prove themselves and so forth. Now, could these get delisted right away? I'm not sure if they can do an executive order or something like that, but there's tension. But you want to remember, last year's tensions were temporary. This year's tensions, if they're temporary, This is opportunity. If they last, then you need to rethink everything and watch it closely. That's what I'm saying. You want to add this to your watch list now. I don't want you guys to miss out on it. It's time sensitive. And the sooner you know, the more aware you are. But the whole issue is that a lot of investors, they love NIO. And NIO's way ahead right now than CCIV, to be honest. But a lot of investors might choose CCIV over NIO in the coming months and probably years. And that could be the next mini Tesla. Could be. But that doesn't take away that NIO has potential. Just NIO needs to go ahead, which is China, not NIO, situate all of this to not get into the delisting concerns and hopefully get the company to expand in America. But the longer it takes, the more market share it's losing to Lucid and to Tesla. And that's where NIO might just do well in China, and it's going to have a cap, right? It's not going to be able to go much higher because it's only doing so much within Europe and just Asian countries and not reaching out here. For investors to get even more bullish, they need to see it everywhere. Right? Think about it. That's how you need to watch this, but you need to start watching it now. Be prepared like a hawk to strike for your opportunity. As always, guys, thank you guys so much for watching. I look forward to seeing your guys' thoughts, and let's make some money.